Now to the management of Union Bank, we have with us Rajkiran Rai. He's the MD and CEO at Union Bank, joining in on the show right now. Mr. Rai, good morning. Good to have you on the show. It seems like a productive quarter for you at Union Bank. Summarize how the quarter has been for us.
It's a quite stable quarter actually, because we had a lot of disruption. So getting a sense of the right set of numbers was difficult. I think the last two quarters has given that stability, even though we had some disruption in the first quarter. One of the redeeming thing is the collection efficiency has improved substantially and the asset quality has improved substantially. The run rate of slippages are coming down, and going forward, the slippages are going to be very, very low. That is one good thing. The credit cost also will come down because this provisioning coverage between 81-82%, the aging provision cost is also coming down substantially. So net interest income is stabilizing. The operating profits have substantially grown. Net interest income is also stabilizing. So overall, the balance sheet looks very stable. Now we are into a period where our net profits will steadily go up and help us in creating the growth capital required. Earlier, whatever operating profit we were making, it was going for provisioning. Now that is coming down. So the banks have cleaned up their books. So now the net profits will start going up. You would have seen our return on assets crossing 0.5, return on equity almost inching closer to 10%. All these are very good indicators, so that banks are able to create sufficient net profits which will take care of the growth capital requirement.
Right. Also wanted to understand the non-interest income growth has been about 65%, 43% on a sequential basis. Tell us a little bit more about how you see this actually shaping up going forward and whether these growth numbers are sustainable.
Actually, this quarter we had recovery of Diwan Housing Finance to the extent of almost 1,650 crores. So naturally, the other income includes that. So the jump is mainly because of that. But otherwise, also our core non-interest income is growing. And having made so much of provisions, you will see 1 or 2 quarters in a year where you will have this kind of spikes. Going forward also, we will see that. It is not that it will be only in this quarter. We will see resolutions. And since we have made such huge provisions, we will also see the other income. So having made such a big provision in the last 4 or 5 years, so you will see write backs happening. So this is one of those quarters where we are benefited by one good recovery. Going forward, it is not that every quarter the same number will come, but then we will see many quarters where this kind of incomes will be seen.
Mr. Rai, on the asset quality front, you still have quite a substantial chunk of non-performing assets on your books. What is the outlook on recoveries? How do we see that number coming down?
Yeah, if you look at gross NPA, our bank is at around 12.6, slightly higher than the peer group, but then we expect that by end of the year it will be close to 11%. But then net NPA at 4.6 is again coming down, and we expect that as the run rate of fresh slippage goes down in the next half year, so this net NPA will get closer to 3.5 levels by the end of the year. Asset quality is improving. There is huge provisioning already done on these NPAs, and the recoveries have improved. So just to add to the point, we had a total projection of recovery of 13,000 crores for the full year, recovery and upgradation. So we have done 10,000 crores in the first half itself. So we are revising our target from 13,000 to 16,000. So we expect to recover and upgrade about 16,000 crores during this year. That itself tells a story that the asset quality issues are behind us, recoveries are improving, the legal processes which are well established now are yielding results, and the net NPAs will inch closer to 3.5 by end of this year.
Mr. Rai, on that note, thank you so much for joining in and for giving us that perspective. Wish you all the best in the rest of this financial year as well. And happy Diwali to everybody at the bank from all of us here at ET Now. And that brings us to the end of this edition of The Market, but there's lots more to watch over the course of the day. Do stay tuned. This is ET Now.